Good evening, friends. This is Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multi-asset and multinational hedge fund. By multi-asset, I mean we actively cover our positions in multiple asset classes like gold, silver, platinum, oil spreads, natural gas, base metals, foreign exchange, equities. And God willing, we would be adding more asset classes like daily leverage certificate, factor certificates. By multinational, I mean we covering our positions in 3 locations, which includes United States, European Union, and Asia Pacific region. But like I repeated many a times, and I would continue to repeat all the times, that we are a proprietary hedge fund. By proprietary, I mean to say no third party. I repeat, no third party can invest capital in our funds. No third party. Today, I would like to highlight my opinion on a practice which is being followed in UAE, United Arab Emirates. I cannot say that all the banks of UAE are having this practice, but few I noticed are having this practice. And this practice might be costing them heavily. Now, first of all, I would like to let you know that every month, rather every quarter, that would be the right word, there are delinquencies which are happening in the hedge fund industry. By delinquencies, I mean to say that hedge funds are winding up, which means the hedge funds who have taken billions of dollars from the investors, they wind it down in huge losses, they are in big trouble, and investor lost billions of dollars invested in these hedge funds. Very recently, we noticed what is happening with FTX. And unfortunately, there is one more name coming up in the picture since last 2 days. I can mention this name, but I'm not mentioning because I'm waiting for the right time to come, waiting for my research to complete, and then I would be mentioning the name in the public. But this name is already in public, to be very honest and precise. UAE, United Arab Emirates banks are sitting on huge derivative book. This is what I noticed in the few banks of UAE. Rather, you would be surprised to know that I downloaded the annual report of one of the banks of MENA. I'm not mentioning this name, I would be mentioning at a right point of time. MENA stands for Middle East. I downloaded the annual report of this bank, and you would be very surprised to know that this bank was also having almost similar issue which I saw in the UAE bank. And majority of the UAE bank are having Big 4s. Example, if I speak about Emirates NBD, they are having Deloitte as their auditor. And you would be very surprised to know that, very recently, I would say KPMG, around 2 to 3 days ago, KPMG is being fined by UK regulator. Rather, you can say they settle their case with the UK regulator, and they paid approximately 5 million GBP, around $6 million as a price. So the statement which I am consistently repeating in the last 5 to 6 years on my YouTube channel, that the practices of these big four firms are always suspicious in nature. And now with the passage of time, this statement is coming true. And UAE Bank are also audited by the Big Fours. Like if you look at the Emirates, then they are being audited by Deloitte. Slowly and steadily, I would be covering more banks, let it be very honest. Today, the basic issue which I would like to highlight as far as the UAE banks are concerned is that these banks are sitting on I would say, derivatives which are held for trading. Derivatives which are held for trading, which is shortly known as freestanding hedges, which means it is free from any standing. That is why it is known as freestanding hedges. Today we are living in a world when market is extremely volatile, and I would like to present few instances of extreme volatile market. But before I point out to extreme volatile market, I would like to repeat that in case there is a big spike happen in the volatility, and God forbid that the probability of this spike is getting higher and higher thanks to the political uncertainty which is happening at Ukraine part. Due to this political uncertainty, the chances of this volatility spike is going higher and higher. And this I would be covering in my upcoming part. To conclude, there is a big danger which is currently on the head of UAE Bank as we speak. And I don't know how come UAE Banking Federation, the DFSA, Dubai Financial, regulator, how come these institutions are either ignoring this, or how come these institutions are taking this as granted? This is something I am really not sure how the hell it is happening, to be very honest. Rest we see in the second part. 5 examples who happened very recently. Although I am not short of examples as far as the financial market is concerned, but we also need to understand that time is always a constraint and we need to respect the time, let it be honest. Japanese yen, which was approximately 150, it fell to 138, which means around 12 big figures down. Now just imagine a hedge fund, just imagine a bank, a financial institution, a proprietary trading desk who took a huge position in the Japanese yen when it was 150, assuming it would be touching 160. But what had happened? Rather than touching at 160, it went down to 138. Even at the time we are shooting, it is around 140. It means there is a heavy volatility which is happening as far as the Japanese yen is concerned. If we look at an American ally who is also known as Canadian dollar, then Canadian dollar touched a high of 1.42. And I don't want to quote, a specific website in financial market who hyped Canadian dollar at 1.42, like it would be going 1.50, and I'm sure that millions of investors would have bought Canadian dollar assuming it is going 1.50. You yourself see where the Canadian dollar as we speak. Let's talk about another very important currency, which is GBP. GBP, which went 1.12, and there were many predictions in the market that GBP is moving towards parity. Rather, I still have a screenshot whereby one person from Standard Chartered Bank clearly said that GBP is heading towards 1.05 as of December 2022. 1.05. And see, now GBP is approximately 1.19. And slowly and steadily it is moving up, up and up. Let's talk about Euro, which went 0.96. And again, I don't want to mention the name of the financial website who projected Euro at 0.80 at a given period of time. And whenever I see such kind of projections, I always feel, what the hell these projections are coming into the picture? And as we speak, Euro is approximately 1.03 and moving towards 1.04. Like I said, I'm not short of, examples. Rather, I tell you that how the things are happening in the financial market. Now, if I link this with UAE Bank, who are sitting on a huge derivative book, and majority of that derivative book is held for trading, which means freestanding derivatives. That's very important. It means the P&L of these freestanding derivatives is directly moving into the P&L. I'm still trying to search about the fair valuation, the methods of the fair valuation, and what is the history of fair valuation, but unfortunately, it is getting difficult for me to get these statistics. But guys, I just want to tell you one thing, that God forbid, in case of any big spike in the financial market, and history is witness that the market is not away from the spikes. There are many instances when the market, when we had spikes which were beyond any imagination. Just take an example of gold. Gold was 1616. And previous to that, an article came in public domain from Credit Suisse, one of the most, I would say, a bank who rarely left with any fraud as far as the banking is concerned. They came up with an article on the gold projection. It is there on Google, you check yourself. And from 1616, it went to around 1780. Now just imagine that how many million investors who invested in gold at 1616, assuming that it would went down to 1500 and it went to 1780. And UAE banks have taken a huge position in IR swaps, interest rate swaps. And if you look at the annual report, then it would be very difficult to substantiate which kind of IR swaps they have taken. Because interest rate swaps are of variety of kinds. There are 1,000 interest rate swaps we have, 1,000. And only mentioning that you have taken interest rate swap that doesn't serve the purpose, you're supposed to mention apparently and very clearly that which interest rate swap you have taken. This is the point I would like to highlight. Guys, in 2018, I predicted about SoftBank. Today, SoftBank booked 50 billion worth of losses in the last 6 months. 50 billion. I projected Paytm, Swiggy, Zomato, Policy Bazaar, and all these softwares. See what is happening. See what is happening with FTX. See what is happening with these Big4s. And now I'm telling you that the disclosure and specifically the derivative positioning of UAE banks is not conducive. It is not conducive and it is not in line with respect to what is happening in the market. And this is something which really a concern for me. Rest, I would be letting you know in my next part. We need to appreciate that depression is coming. We cannot run away from this fact. There are people who are still not accepting that depression is coming. They are still under an impression that we are living in recession. Amazon, one of the most profitable technological companies of the globe, they are cutting around 10,000 people. And this is not a confidential information. This is something you can see in public. Today, while doing my research, I don't wanted to name few American companies, but I saw the articles about few American companies. Guys, I just wanted to tell you one thing very clearly and upfrontly, which is that we are moving towards depression. The geopolitical issues which are happening in Ukraine is also not conducive. Example, the attack on Poland. Example, the nuclear capability of Russia. Example, US is turning out to be a direct party in this conflict. Example, yesterday, 17th November, huge strikes by Russia on Kiev, the capital. Example, the huge amount of debt which is being raised by United States in the last couple of years, specifically talking. Example, 28 to 29 trillion dollars. You heard me very right. 28 to 29 trillion dollars worth of balance sheet of only 4 central banks: Federal Reserve, European Central Bank, Bank of Japan, and People Bank of China. Only 4 central banks. In this eventuality, one thing is very clear, that 2023 won't be an easy year for the banking and the financial market. I would be surprised that if 2023 would end up being many times complicated than we are having 2022. Like 2022 is many times complicated than 2021. And God forbid, if there is any, World War III eventuality came into the picture, then the financial markets worldwide would face a huge setback. And unfortunately, the probability of world war is still there. Guys, in this eventuality, banks having billions of derivatives which are considered as a freestanding derivatives is not a good sign. It is not a good sign because in this eventuality, if there would be any drift, which in our parlance called drift, if any eventuality there is a drift happen in the banking, it would simply collapse the whole system. Remember 2014-15 period when the MENA markets, Middle East market faced liquidity crunch thanks to real estate collapse. Remember 2014-15, 13-14-15 you can say. Did any credit rating agency, any bank warned you? And how come the MENA market faced a huge credit crunch thanks to the real estate market? Huge credit crunch. Rest I leave to you. This is Rahul Magan from Treasury Consulting Group. You knew my personal number +91 +91 9899 242 978 +91 9899 242 978. Alternatively, you can visit our fixed income platform www.fixedincome.global. Let me repeat, www.fixedincome.global. Thank you guys. Like we promised, we are covering MENA market and we are covering in detail more videos on the cards. Have a great time ahead. Thanks guys. Thank you.
Thank you. Bye.